From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 8th, 2017. In a moment, I'll be taking a look at the USDCHF, the US dollar, versus the Swiss franc for today's trade analysis. But first, I want to recap a couple of the trade suggestions made over the past few days. As you can see at the very bottom of my chart, I have 3 trades going. These are 3 trades that were suggested from the live trade room and the daily notifications offered to members. First off, starting here on the AUDUSD, Australian versus US dollar, we're looking at the 4-hour time frame. We took the short at 7,600. You can see the trade again going down here at the bottom of the chart. 7,600 was the short. That is there in the midst of the purple shaded area. You see towards the top of the chart, you see the market broke down under the purple zone, rallied into a resistance, found resistance, and now has fallen back down towards the 75.60 or so level. So currently sitting about 35 to 40 pips of profit on the trade. If you look back to the left-hand side of the chart where the black box is, you can see that the market tended, as long as it was underneath the purple shaded area, tended to go down to the yellow zone. So the yellow shaded area down around 75.40, 75.25 is our target for our first take profit. That would be where we're looking to target for our first take profit. However, it doesn't mean it's going to make it down there. So what I would suggest is that you use your stop loss to protect the trade from going negative again. I am at this point, have my stop losses set using the trade manager available to members on the Prodigy members website, set at 5 pips of profit. So in other words, I've trailed the stop loss. I'm locked in 5 pips, can't lose on the trade. I will continue to follow it down towards the yellow zone. Zoom in one time so you can see that. Continuing to follow it down from here, from the purple zone, looking to target down to 75.40, but locking in with the stop loss. Let's move on over to the GBP. USD Greater British Pound versus the US dollar. Similar scenario. We're in a downtrend. We were looking for an opportunity to go short on the breakout underneath support. Underneath, basically, the purple shaded area, the 122.05, 122.25 level. Yesterday, we saw it push underneath there. Underneath there enough to give me confidence to go ahead and take the short. I went ahead and went short at 22.05, 122.05. And you can see down here at the bottom, we're over 40 pips of profit on the trade. We've seen even a little bit more as it dipped down to the blue zone. The 1.2155 level was our first initial target, of course. That was the blue shaded area. If it continues to push through the blue zone today, we'll look for it down closer to the mid 1.2000s, but right now the blue zone holding as our support. Again, using the trade manager, my current stop loss is locked in with 15 pips of profit. I can't lose. The worst case scenario, I'm going to end up with 15 pips on the trade. By the way, I have also closed some of the profit. If you can see here from the blue zone, it hit the target. So when it hit there, I made the trade decision to close some of the lots. We started with 0.05 lots. It's now at 0.02 lots. So I've closed some of the profit, locked in with a stop loss at 15 pips. I can't lose on the trade. It's a winning trade. Let's go ahead and look at the US yen because this one has really done nothing this week. We did get an opportunity to see 10, 15 pips of profit on the trade, by the way. We've sold earlier on this week on the breakdown of the yellow zone. We sold it, and we've had to endure it so far for the past 2 days as it's bounced around. By the way, we did sell it at 1.1380. The low of the two 4-hour candles ago, the low of this candle is 60. So again, you saw a little bit more than 15 pips of profit on the trade. Not quite enough. Didn't go over 20 pips and didn't lock us in at break even. If it did, we'd be out of it. But if it had gone 2 or 3 more pips, we would have been at break even and likely out of the trade right now. So you've seen over 15 pips of profit. I hope that you are using appropriate risk strategies and trade management procedures to protect yourself from losing a massive amount of money on any trade that we decide to take. If it goes down, great. If it doesn't, of course, again, I'm using appropriate risk strategies. Let's go ahead and zip on over to the USDCHF. We do have some news today. We have the ADP non-farm coming up in about 30 minutes from the recording of this video. Could be very interesting for all of the U.S. currency pairs, depending on if it's a large deviation from the expected forecast number. The expected forecast number for that ADP non-farm is 184,000. So if it comes out much larger than that. If it comes out, 200 or higher, then we would look for a good solid push for the US dollar. If it comes out lower than that, 150, 40, 30, then we might have a push against the US dollar. So we want to continue to watch that news coming up in about 30 minutes again from the recording of this video. Taking a look at the daily time frame, two different trends, the black trend line, the red trend line. We're currently in the uptrend along the red trend line, even shorter if you look at this little blue trend line in it right here. So all of that together tells me that if I'm going to focus on a direction right now, I'm focused on the red and the blue trend line and the rising trend that we see here. I've taken Fibonacci from the high of the black trend line, where the black X is, down to the lowest low, puts the 0.618 Fibonacci retracement level of that previous downtrend at 1.0155. Top of our orange shaded area. Now that we see that, let's go ahead and zoom it in again. So if we're buying in the direction of the trend, which is an uptrend, we want to buy on dips to support, which at least at this point is the green zone, if not further the yellow zone down towards the 100 period moving average, by the way. Green zone or yellow zone, dips to support, positive news for the US, we buy it, and then we look for the breakout above the orange zone. So if we're trading this today, one of two things needs to happen to trade the trend. Dips to support the green zone or breaks through resistance, the orange zone. In between there, we just don't really have a trade set up yet here for the dollar franc. Take it down to the 4-hour time frame. It's not going to change any of that analysis. It just gives us a view of zoomed in view of this. Again, there's the blue trend line. A dip to the blue zone or green zone blue trend line might give us an opportunity. That is 101.15. 10100 at the green shaded area, or like I said, a breakout above the orange shaded area may give us our next opportunity to go long in the direction of trend, assuming, of course, like I said, we get good positive data for the U.S. at 8 non-farm at 8:15 a.m. Eastern U.S. time today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.